Cathie Wood's ARK Invest just completely exposed how wrong Wall Street has been and how wrong all of the analysts on Wall Street are going to be on Tesla stock. Check this out. We'll go through ARK Invest's big ideas, and in 2017, analysts made projections how many EVs we were going to sell, and then this is what actually happened. They did not learn from their lesson. I did mention this in one of the last videos, just very briefly, but we'll go through this report in more detail. And also, Cathie Wood was just on TV. We'll dive into that as well. But look, right now, this is what Wall Street is still projecting, or the analyst consensus is still projecting in 2027. This is what ARK Invest is projecting. Which one of these two do you think is going to get it right or less wrong? You know, I'm just having a difficult time understanding how you can see this, that you made this terrible mistake, and this is what actually happened, and then you make that same mistake all over again. How? ARK Invest's projection from 2017 was off by 45% in terms of how many EVs we were going to have in 2022. But the analyst consensus was off by 400%. 400%. And this is where I also disagree with Gary Black a little bit. Gary Black thinks that EVs will have 60% of the market share in 2030. ARK Invest says 65% of the total sales in 2027. Here are auto sales year by year. As you can see, usually it's about 90 million or so vehicles until we had the virus, and then everything slowed down a little bit. And these are electric vehicles in light blue here. And in 2027, ARK Invest is projecting that this would be a big portion of all of the sales, and we would still have some internal combustion engine vehicles. And this is the number of internal combustion engine vehicles that are at risk, so probably are not very likely to be internal combustion engine vehicles, more likely to be EVs. Here you can also see how every year, this is gas-powered and this is electric vehicles, every year gas-powered vehicles, there are less sales, except for 2021, 1 year, that's an exception, and then down again, and EVs every year, they are sold a lot more. Check this out here. According to Wright's law, for every cumulative doubling in the number of units produced, battery cell costs will fall by 28%. Despite the recent commodity spikes and associated battery price increases, this relationship should persist over the long term. At a lower production base, lithium iron phosphate cells could accelerate the cost and price declines. This is a huge deal. This is the number of EV units necessary for a cumulative doubling of production, so about 10 million. So in about 1 to 2 years, keep in mind, not every EV uses LFP batteries, so that's why I say 1 to 2 years. In about 1 to 2 years, the cost of these batteries should come down by 28%. And eventually, we will be selling 50, 60, 70, 80 million EVs per year. So the costs for batteries are going to come down 28%, and then another 28%, and then another 28%. The batteries are going to be cheap. And look at this. In the past 4 years, charging rates have improved nearly threefold, from 40 to 50 minutes for 200 miles of range. During the next 5 years, it could drop nearly fourfold to 4 minutes. As EV charging reaches an acceptable rate, ARK expects the industry to optimize for other features like autonomous driving, safety, and entertainment. This is all based on Wright's law. You can see that the trend is very clear, and it has been accurate so far. So 4 minutes for 200 miles. That seems quite possible, actually, and very likely. But still, most importantly, it's not like it would just stop there, because this is based on Wright's law. So for every cumulative doubling of production, there's a certain percentage by which charging improves. So 4 minutes to 200 miles, that is not the limit. Anyone who is saying that charging long-term is going to be a problem is not familiar with the Wright's law. And look here, this is an average price for a new vehicle And you can see the Model 3 here above that significantly. And now Model 3 is below. EVs have hit price parity with gas-powered vehicles. This is adjusted for inflation. As you can see, the first vehicle reduced the cost of transport, but then it stayed basically exactly the same. And now, with robotaxis, that is likely to change drastically. Full self-driving is where I believe personally Tesla has the biggest opportunity. Pause the video if you'd like to check this slide out. I'm going to move on. ARK is projecting that Tesla would have some sort of full self-driving capability that is actually happening in 2024, so next year. And here you can see how many vehicles Tesla has that are collecting data for Tesla, 2.7 million. This chart is actually not really accurate because this is only 270,000. And these are Waymo, 1,000, Cruise, 100. 500, 300. These are not meaningful numbers. Archimedes says that oil demand could decline by 30% by 2030 because of autonomous electric vehicles. Autonomous taxis could eliminate 60% of short-haul airline flights. Wow. Pause this if you like to take a look. If full self-driving is solved, Archimedes says that in the year of 2030, the enterprise value of basically autonomous taxis could be 28 trillion based on a 15x multiple. Enterprise value is sort of like market cap. So you imagine Tesla stock, let's say Tesla, I don't think is going to capture 100%, certainly not. But just imagine Tesla capturing half of that or even a third of that. That's a market cap close to what? $10 trillion? If Tesla's market cap goes to 10 trillion, that would be roughly a 20x from here today. And now let's see what Cathie Wood said on TV just now, yesterday morning.
It has been a heck of a month. It's been a heck of a 2 years. It's been a heck of a 5 years, frankly. We've been talking sort of about all of it. But also, I know you have some new ideas about what's going to happen this year and maybe some of your best ones. I'm just sort of curious your broader context in terms of how you're thinking about the market and how you're thinking about your own performance, both in the January period, we got the Fed, the backdrop of the Fed is part of that, but also just the larger backdrop over the past couple of years.
Ooh, that has to hurt a little bit. If you thought that holding Tesla stock is really difficult because of how volatile it is, well, if you held ARK right now, you are pretty happy. It's up 37% almost year to date. However, if we look from the peak to the lowest point, it was down 80%, and it is still down 74.2%. And unlike Tesla stock, which still is up 700% roughly in a period of 5 years, ARK Innovation ETF is up 4.75% during that same time. So this is one of the reasons why I just only hold Tesla stock in my stock portfolio, because the numbers are so good. There is risk with Tesla stock still, but I believe the risk is equal to that of, a relatively stable, big, mature company, but the returns are that of a startup. So the risk to reward ratio for me is too good to pass.
I think what we've been through.
Props to Cathie Wood for sticking to her strategies, but I heard some pain in that voice just now.
I think what we've been through is a very big inflation and interest rate scare that hit long duration assets incredibly hard, including long-term bonds. Last year, the worst performance in the bond market since the 1700s. That's how bad this was. And of course, that was going to really hurt our strategies. But we do believe, and we have been saying for some time, that the inflation is unwinding. We think the market is leading the Fed, the bond market. I think we're down to 3.5% today on the 10-year Treasury bond yield. The bond market is basically saying the Fed is close to the end of this tightening move, and is also saying that inflation will surprise on the low side of expectations. which means when we look back that the past 2 years inflation issue and interest rate issue has been a function of massive supply shocks to the system. And I noticed that even Janet Yellen this week said that she believes that inflation is probably going to surprise on the low side and stay there and might even become a problem. Larry Summers, same thing. He's saying, wait a minute, the economy is much weaker than I thought. So I think we're close to the end.
If you didn't know, Janet Yellen was basically Jerome Powell. Well, at least Jerome Powell succeeded her. And now Janet Yellen is the 78th United States Secretary of the Treasury. So, in other words, she works for Joe Biden. I don't know about you, but whichever political party it is, I would not really base my data on what government officials say, because usually they never really say what is actually happening. They have to say certain things to keep people calm, to not freak out people. They have to say inflation is transitory, even though they might know it is not. But they do have to say it to keep stability. At least that is what many of them believe, because if you don't say those things, then, for example, if you don't say, inflation is transitory, then it becomes a little bit of a self-fulfilling prophecy. If you say, yeah, inflation actually is not transitory. So yeah, you guys take all of your investments from wherever you have them and make sure that you put them in a way where inflation is not going to affect those investments. And this probably is not going to cause even more inflation, right? That's why they don't really say what they actually think. Also, naturally, I asked ChatGPT, is it common for politicians to lie? Unfortunately, it is not uncommon for politicians to lie or make false statements. Where do you consider Janet Yellen to be? I'll let you decide. I personally really hope that inflation does slow down. Clearly, we are already seeing disinflation, meaning we still have inflation, but it is lower and it is less and less and less and less. And if this trend continues, then we will have 3%, 2% inflation, but we are still a long way from 2 to 3% inflation. We are at 6.5% still.
I do know that the market is leading the Fed, and I also know that innovation solves problems, and we have a lot of problems now, including the Fed being so tight and activity becoming so weak in so many areas. So, we put out big ideas last night. These are our big ideas 2023. Very excited. And the first one you see there is artificial intelligence, which, of course, ChatGPT has finally caught the public's imagination. We've been working on artificial intelligence for a long time now, and I think some of the things we're seeing are just the beginning of the impact that artificial intelligence is going to have on every sector, every industry, every company,
including Tesla. And this is the buying opportunity for Tesla stock explained by Elon Musk. My name is Matt Poises. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.